Hello and welcome to the very first episode of In Good Spirits, a podcast where we explore the fascinating world of whiskey investments. I'm Thomas Ballantyne and I'm so excited to have you join me today as we dive into a topic that's become a real passion of mine over the past few years, investing in whiskey. In this podcast, I'll be sharing my experiences and insights in the whiskey investment space. We'll cover everything from understanding key factors about whiskey value, how to buy and sell, what I think is a good purchase versus a bad purchase, strategies, auction houses, insurance, and the difference between bottling and casks. This very first episode will just touch on Whiskey 101, give you an insight into the whiskey world, the whiskey industry, what to look out for, and just reveal the curtain about what whiskey investing is all about as an initial touch point. Now, you might be thinking, whiskey as an investment? Sounds a bit unusual, right? Surely this is just a way for me to convince my better half to drink more whiskey and buy more bottles rather than a natural investment piece. But trust me, over the past decade or so, whiskey has been proving itself as a high-performing asset class, with rare bottles and casks seeing impressive returns. In fact, whiskey has outperformed many traditional investments, including stocks, gold, fine art, watches, etc., making it one of the most exciting and profitable ways to diversify your portfolio. To put it into perspective, the value of whiskey has increased dramatically over the last decade. According to the Whiskey Auctioneer's 2022 market report, whiskey prices have risen by an average of 18% annually since 2010. And in fact, between 2019 and 2020, whiskey prices soared by an impressive 12%, even in the face of global economic uncertainty, i.e. COVID-19 that we all went through. And then when you compare this to other traditional investments, it's clear whiskey is outperforming many other asset classes. For example, during the same period, the S&P 500, which is often used as a benchmark for comparing traditional investments, gained only 7.7% annually from 2010 to 2020. And if we compare that to gold, normally considered a safe haven as investments, particularly in times of economic uncertainty, it has outpaced that too, with gold rising only about 5% over the last decade. But perhaps even more impressive is the Rare Whiskey 101 Index, which tracks the value of rare whiskey bottles. This index has increased by over 300% over the past 10 years. One that I encourage everybody to go and read, because it gives you really good insight into whiskey bottles and how much they've increased in price, particularly in the last 10 to 15 years. But before I get into the nitty-gritty of whiskey investment strategies, what makes a bottle valuable, I just want to share a little bit about myself and how I got into the whiskey and how I got into investing in whiskey myself over the last 5 to 10 years. So while I was at university, I actually worked and managed a whiskey shop, where I had the privilege of learning firsthand about whiskey and its incredible spirit and what made it so unique. In the store we had many tasting nights, actually weekly, and in those tasting nights we tried many different types of whiskey, and customers would always want to come in and find out why a certain 12-year-old or 15-year-old or 18-year-old was different in price. Those ones would make sense. But sometimes you'll have whiskey that's from the same distillery but could be younger that's more expensive. Why is that the case? Or you have whiskey that's the same age as each other just from different distilleries, and they'll have a difference in price. Or literally from the same distillery, same age, but again, difference in price because of the type of cask it was matured in. And so all of these intricacies through the tasting nights where we had to go and try the whiskey so I could eventually sell it to the customer started to pique my interest to see why certain things gained value and what it derived its value from. So it wasn't long before I started looking into buying my first bottle and getting in as low as £50 just with some birthday money. For those that are whiskey connoisseurs, it was a Balvenie 15-year-old single cask bourbon. Bought that for £55 from the store, saw it was being discontinued, i.e. no longer made, and now over 5 years it's now worth about £150 to £250. So showing that you don't really need that much money to start with. But then, having looked at that, I then started to think, well, are there other things I can get into? Do people actually sell casks of whiskey? and, did my research one night at the store and found that actually people do buy and sell barrels of whiskey. But before we get into whiskey bottles and cask investments, what I want to really make clear is that whiskey investing isn't just for the rich and famous, and it's not just something where you need significant capital to break into. Similar to stocks and shares, you can just have a few £100 to start buying bottles of whiskey. But you can start from as low as £2,000 for a barrel of whiskey. So myself, I've bought from all that range, all the way up to £10,000. And I've started, as I mentioned, just buying my own bottle for £50 just to kick off my own bottle collection. But whiskey investing does go to quite high levels and quite significant levels, so you can get in at £2,000 at the low end. But I've also been offered a barrel of Macallan 21-year-old for £250,000. Now, that wasn't something that I bought. It's not something I had the capital lying around for. But it just shows you the potential power and potential growth of whiskey. If you're willing to stick it out for the long run, what kind of returns you could see from an initial very low investment. So firstly, I'll just touch on the rise in price of bottles. So normally the rise in price in bottles is, like everything, supply and demand. And the easiest way to look at supply is there a limited release from a certain distillery? So a good example of this is normally Macallan. They tend to release special edition bottles for certain events, and they only make around 1,000, 2,000 of these bottles, which is great. People want to buy them, people enjoy them, but then in 3 to 5 years' time, people want to buy them again, realise that most of them have been drank, you can't really find it in a traditional whiskey shop, so then have to go through door to door, having a look at all these different types of more specialised stores just to try and find that same bottle again. And lo and behold, when they do find it, it's certainly not the price that they paid for before. But the other way to look at whiskey is also the general supply of what's being produced, but not from today, but looking back in the past. And a great example of this is to look at Japanese whiskey. So to take you on a little bit of a history tour, Japanese whiskey has been going since the 1920s. That's the oldest distillery, Yamazaki. I think it was 1929 that they were founded. And they were founded by a distiller who came over from Japan to Scotland, studied the whiskey himself, loved the spirit, loved the country so much, married a Glaswegian lady, and then flew back to Japan and founded his own distillery. And the reason why Japanese whiskey got so popular is they won Whiskey of the Year in 2013. And the award came from Jim Murray's Whiskey Bible. So for those of you who don't know the whiskey world, Jim Murray's Whiskey Bible is normally the Bible, as it suggests, about what's good and what's bad for whiskey. He rates whiskies out of 100 and gives them a flavour profiling in the book, and he also gives them a score. And every year he announces in his book what the best whiskey of that year is. And he has many other categories within there for each age groups or different types, different styles, etc. But then he does have a number one overall. And so this Yamazaki Sherry Cask 2013 won Whiskey of the Year from Jim Murray's Whiskey Bible. And so everybody wanted to try that bottle of whiskey. And it was only £150, £200. However, once it won the award, it absolutely exploded in price. And a year later, it was going on auction sites for over £1,200 to £1,500 a bottle. But not many people could afford that £1,200 or £1,500 a bottle. So what people were doing is then trying other Japanese whiskies. And they found out that these were actually really good too. Stuff like Hibiki, Yoichi, Maigikyo, Hakushu. And it wasn't just the Yamazaki that was a good whiskey from Japan. It was all these other distilleries too. And so people then started buying more and more and more. The Japanese distiller looked at this and thought, great, what we're going to do is cash in on this. We won't see this demand maybe again with one of our whiskies winning Whiskey of the Year. And so what happened is they started bottling younger and younger whiskey. And in the Yamazaki's case, they actually released a whiskey called a Yamazaki Distiller's Reserve. So if I take their core range, there used to be a Yamazaki 12 and a Yamazaki 18. The 12-year-old you could buy for £45 in Tesco. and the 18-year-old was about £110. Now, the 12-year-old is about £130, and the 18-year-old is £300 to £500 on a good day. But that's not because the whiskey itself now is that much better. It's the exact same whiskey as if you had bought it before it won any award. But what's happened is the number of supply has gone significantly down. And the reason that happens is because whiskey is not like other production processes. Once you make whiskey, that is how much you've made that year, and you will bottle in the future. To give you an example, if I was Yamazaki and I produced 10 million litres this year, in 10 years' time, I'm expecting 10 million litres. Technically, for those listening in, it'll be less than that because of the angel share, where you would lose 3% a year through evaporation. But to keep the example simple, let's just say at most you'll make 10 million litres, and in 10 years' time you'll get 10 million. But that's all you have. If you start bottling early, you have less and less stock around to bottle. And this is exactly what Yamazaki did. They produced the distiller's reserve, made it non-age stated, or NAS in the industry, and what that means is that the whiskey in the bottle could be at any years old over 3 years, and the distiller doesn't have to tell you exactly how old the whiskey inside that bottle is. So it could be 3 years old, it could be 60 years old. But in Yamazaki's case, what they were doing is bottling 11, 10, 9, 8, 7, even as low as 6-year-old Yamazaki. And this meant that they were trying to cash in at this younger age and put it at a lower price than their 12-year-old. So their 12-year-old initially went from £45 to £75, and then the distiller's reserve was then £45, probably suggesting that the whiskey in there is of a younger age. But then from that point, there has been a reduction in supply for your future bottling of your 12-year-old immediately, based on a business decision. And so when you come to bottling your 12-year-old or your 18-year-old in the future, instead of having 10 million litres like you thought you had at the start, because you've been bottling at a younger age that you didn't expect, you might have half as less stock. And because there's half as less stock, we know from supply and demand basics, the price is going to go up. And this is exactly what's happened with Japanese bottles. So I encourage everybody to look at Japanese bottles as a great case study and to see how supply is really affecting their prices. Now, they've increased production significantly in the last 5 years, but again, we won't see those production levels for 10, 15 years. So unfortunately, if you wanted to get into Japanese whiskey, it might be slightly too late to meet the significant returns that we've spoken about. However, because whiskey is always increasing in age and it's got a set process, you're still going to see returns on whiskey no matter what. Maybe not as quite explosive as the Japanese style, if you had a barrel of that lying around, or even a bottle of that lying around. But that's just how supply is quite fixed and quite set in the whiskey world. You can't rush whiskey. It's not like a commodity where we can increase production, we can mine more of it, we can plant more of it, and then we can get some more in the next year. A 10-year-old whiskey, as it suggests, takes 10 years to make. You cannot increase your supply. If you've bottled it already, then that's tough luck. You don't have any 10-year-old to lie around. So you almost have to be quite disciplined as a distillery to make sure you've got stock lying around for your older years. So that's a very simple but easy way to think about bottles. Think about the supply, think about the demand, and those two factors affecting it. Supply, has the distillery started trying cashing in and selling younger stuff? That will lead to price of your bottle going up. Is it a limited batch run? Or is it one that they're going to continually make as part of their core range? And then demand, has it won a certain whiskey award from a whiskey connoisseur like Jim Murray's Whiskey Bible? Or has it other whiskies in that collection won Whiskey of the Year, and therefore people are going to look at those ones? So Japanese was a classic example. There are other distilleries in the world where they might win Whiskey of the Year, such as Taiwan, Kavalan whiskey. There's whiskey being made in England now. There's whiskey in India. You know, there's all these different whiskey distilleries around the world. So just keep an eye on those from a bottle perspective. But moving on from bottles, and probably the reason why a lot of people are going to be tuning in today, is about cask of whiskey. and how that journey goes and what the 101s are there. So, first and foremost, whisky casks mature over time, and this aging process is what drives up their value. A cask of whisky can increase its worth as the liquid inside ages. It becomes more complex, it gains desirability, it picks up extra nuances, and it picks extra flavourings and extra kind of characteristics that are unique to that whisky. And especially if it's from a sought-after distillery, these can really push prices higher and higher. And casks that are aged for decades in particular, from limited production or from reputable distilleries, see significant appreciation compared to other non-heard-of distilleries. For example, if I said Macallan, a classic one, everybody's probably heard of it, the prices of those certainly increase a lot more. But if I told you Braeval or Balblair or Edredauer, ones that probably most people on this podcast haven't heard of, and they might not gain as much value as other ones that we've seen from bigger distilleries with bigger, more reputable names. Now, here are a few reasons that I think drive the value of whisky and are the reason that a lot of people are starting to buy and invest in whisky. Firstly, it's just high rate of returns at the moment. As I was saying, it's been outperforming gold and other alternative asset investments. So people are looking at that now as an actual source of income. Two would be, as I've mentioned, the angel share. So for those of you not aware of what the angel share is, basically when whisky is aging and gaining all of those fun and complex characteristics, it's evaporating and losing 2 to 3% of the volume of the liquid in the barrel each year. And so because it's losing that liquid, you have less to sell when you come to sell it. And so once you get from 0 to 10 years, you might only have 80% of the barrel from when you first started. And then that's the reason why when you get to these higher age ranges, 20, 30, 40, 50 years, you see the prices really explode. Because the price of the whisky, not only do you have to see the return, but you actually have to see that there's actually not as much of that liquid lying around anymore. So if we take Glenfiddich, for example, one that most people have heard of, the 50-year-old is £20,000 a bottle, compared to the 12-year-old, which is about £25. So you can see there that there's a huge difference in price, but that's mainly driven, A, by the exclusivity of the whisky, but B, there's actually not that much supply of that whisky lying around because it's mostly evaporated over 50 years. Thirdly, I think a booming market, particularly in China, Japan, and even beyond as Brazil, is growing the demand for good quality whisky. And these markets are demanding more and more of the supply. And so distilleries have been now selling exclusive bottlings to that region of the world. And so demands in these regions, especially for India and China, is that you get a stronger middle class. You're going to see a lot more people wanting to own these types of assets. And fourthly, in terms of the UK, this is a very specific example, but one that is driving the price is tax efficiency. Now, I'm not a tax consultant and I'm not a tax advisor, so please do your own research and get some second opinions and confirmation on this. But what whisky is classified as is a perishing asset or a wasting asset in the eyes of the UK law. And what that means is because of that angel share that evaporates 2 to 3% a year, is actually the whisky or the investment itself will not exist if time went on infinitely. So because you're losing 2% a year, if you waited 100 years, instead of having a barrel of whisky, you'll just have a barrel with no whisky inside. So the reason why it's got tax efficiency is because you get zero capital gains tax from this. And so people are looking at whisky as an investment because you're not being charged 24% capital gains tax. And so the actual investment is a lot more tax efficient than buying other stocks and shares where you are limited with the amount of tax efficiency that you can get. Whisky has no set limit. You could buy £500,000 of whisky and it all be exempt from capital gains tax. Now again, please do your own research and make sure that that is 100% right. But as an overview, that is the reason why a lot of people in the UK are now starting to see whisky as an investment. And in particular, over the last few years, you might have seen lots of ads pointed your way, There's been a lot more new brokers out there who are wanting to kind of into this field and this area, and then stuff that people are very interested in for those tax efficiency reasons, especially in the UK, as we've got quite a high tax bill coming through with the latest government. So those are the quick overviews, the kind of the 4 key points I think driving the price of whiskey at the moment. Higher rate of returns are attracting more investors into this area, looking to diversify the portfolios and make higher than normal returns compared to stock market. A booming global market from places like India and China, who are looking to buy a lot more whiskey and are getting a lot more exclusives. Then there's the angel share we spoke about. There's only so much being made and there's so much evaporating each year. So when you come to those higher ranges, there's actually just not as much stock lying around. And then just tax efficiency. People are, getting interested into whiskey investments from a tax efficiency point of view. Similar to the higher rate of returns, you've got people both looking for greater returns from their investment, but also tax efficient ways of gaining that money back from capital gains and getting around that capital gains tax. But leading on from that, I'll just give you a quick overview as to what you do and what is the overall process in buying a cask of whiskey and selling a whiskey. So, once you find a barrel that you like, you've done your research, you like the particular distillery or the particular barrel size or the particular age that you're looking for. A lot of people always look for their birthdays as a particular barrel. That's a fun one to keep. Or ones for newborn babies, or ones for anniversaries, and so on and so forth. But whatever the reason, you found that particular barrel that you love, you think it's going to be a great investment, you bought that one, great, tick. Next thing you do is then you just have to pay for storage and maintenance. So normally it's around £50 a year per barrel, and that includes storage and insurance costs. That's great for people buying casks. You don't have to keep it in your own shed or your garden, or sneakily in the side of the living room. You can fill up your house quite quickly if you buy 5 or 6 barrels of these. So it's really good to have warehouses that look after them for you, and they're insured every year. After that, it's literally just a waiting game. You wait 5, 10, 15 years, however you want to wait, and your whiskey's maturing and gaining flavour and gaining hopefully more value. And then there comes a point where you want to sell it. And this is the point where a lot of people are concerned or mystified as to how it will be done. So I'll give you a quick ways that you can go about selling your barrel of whiskey. And in later podcasts, we'll delve into this subject a lot more. But there's mainly 3 ways that I see of selling your whiskey. One is that you can bottle it yourself. This has problems with alcohol duty and then you selling it on yourself. So you might think, great, my bottle or my cask is worth X amount. It means it's going to be worth £20 a barrel, £20 a bottle, for me to sell. I'll sell it in the market at the moment. I can see it's gone for 65. Well, unless you have your own whiskey shop, you're probably not going to sell it for 65. You're probably going to have to sell it to an independent bottler yourself or another whiskey shop yourself, and they're going to want to see returns themselves of 40-50%. So you're actually probably going to sell it for £45, which might be a lot less than you were expecting. But also the hassle of going about selling it can be quite annoying, and also there's a lot of problems, or shall we say difficulties, about what size of your bottle that you're selling, the labelling you put on it, whether you can use the distillery's name, your name of the independent bottle has to be bigger than it, etc., etc. There's a lot of regulations and red tape around it, which just might not be worth your hassle. The second one is just selling to another private investor. So normally when you get a broker, or you can ask a broker, they'll go and find you another private investor who wants to hold it for another 5 to 10 years after you. So you might have had it for 15 years. You've got your 15-year-old whiskey, and you go, right, well, it's time for me to cash out, see that money, see that value come through, but someone else might want to hold it for another 5 to 10 years. And then finally, distilleries themselves and independent bottlers buying it off you. So a distillery might have a shortage of supply, as we spoke about earlier. There's a set routine. They might have sold some younger stock, but now need to buy some older stock back because they actually have a certain release they want to release, or they have a certain style of whiskey that they want to released as a limited edition, but they don't have enough barrels of, but yours is one of that meets the criteria. Or just independent bottlers itself. So Berry Brothers and Rudd is a classic example. Old Malt Cask or Hunter Lang, I would encourage people to look out for. And these are basically not distilleries themselves. They're literally people like you and I off the street. They'll buy a barrel of whiskey and bottle it themselves and then just sell it to whiskey shops. So, as a whole concept, as a secondary market, they literally go to distilleries, buy barrels off them, and bottle it themselves and try and flog it themselves. So those guys are super interested. So those are 3 ways of selling it once you get to the end. You bottle it yourself and sell it on to another private investor, or sell it back to a distillery or an independent bottler. Now, the problem with selling it is there's not a, if you excuse the pun, liquid market for whiskey. It's not like the stock market. There's not a mark to market that you can sell shares back onto, and there's not loads of players buying and selling every day. So it might take you 2 to 3 months to sell your barrel of whiskey. Bottles of whiskey tend to be a bit easier. There's auction sites that you can sell to, and there's lots of independent whiskey shops who will buy it. But for cask ones, it tends to be a bit of a slower pace. But there are a few caveats and a few exceptions to this rule. For example, if you've got a whiskey that's quite old, 20 years old, for example, that will sell quite quickly in the market. People are a lot more interested in aged whiskey. But if you've just got in, you've bought at 1 year old, and then you're trying to sell it just a couple of years later at 3 years old, there's not going to really be a market there for investors or for independent bottlers to buy it. So it really narrows down who would want to buy it at that point. And in fact, if many of you talk to brokers yourselves, you will see that a lot of them have 5-year minimum fixed terms for how much long you invest for. So they'll say that once you buy the barrel, you have to keep it with them for 5 years before you even consider selling it. And that's just because, particularly when brokers look to sell you whiskey, they tend to sell you the younger age stuff, and they try to take you on a journey with the whiskey. Whereas if they have the older stock, they tend to keep that for their more higher clientele and stuff that they can flip on a bit easier. But what I have seen as well is a few brokers are now doing guaranteed buybacks. Again, there's normally a minimum holding period of 2 to 3 years. But then after this point, the broker or the company is willing to buy it back off you, normally at a slightly lower rate of return. So instead of seeing maybe 10-12%, you might see 8-9%. But they give guaranteed cash within 2 weeks. So there are ways, and there are people in the industry who are looking at this and are finding ways to get your money out quite quickly. And they're realizing that is certainly an obstacle in the industry. But that should give you kind of a rough idea as to who would sell it, who's willing to buy it off you at the end, and just an initial timeline as to how you would go about selling a whiskey cask and what you can expect. But that's it for today. That's just a quick overview and guide and 101, shall I say, about whiskey investing in terms of bottles and casks, and why prices might go up and why they are continuing to grow over the years, and why I think it's quite a stable asset class to invest in, particularly for the long run. There's actually quite a few things that are happening in the whiskey world which is quite fun. There's tokenization, so instead of buying a whole barrel, maybe spending that £250,000 from Macallan, they're actually looking at breaking that down into blockchains and tokens that people can do a more of a communal investment for. Now, that has its own fun nuances and fun obstacles that it has to overcome, but certainly an interesting space for the whiskey world. And then there's other things like ESG regulation coming in, which has affected peated whiskey. But this is all topics for future episodes. Thank you very much for listening to today. This has been a quick 101 whiskey for investing. In future topics, we're going to touch on about investment strategies, storage, insurance, maintenance, what makes a good whiskey, what makes a bad whiskey, how I've invested my funds over the last few years, and some general updates from the whiskey world, as I spoke about there, about tokenization and ESG. Next show, we'll talk about how to get started with whiskey investments, and I'll break down how to get started investing in whiskey, what I look for, what makes a good whiskey to invest in, what makes a potentially bad whiskey to to invest in, how to then define your goals and what you want to look at for your whiskies, whether that's a bottle or a cask, and some introduction into what strategy to play in the long term for investing and what my strategy is in the long run. Thank you very much for listening today. It has been an absolute pleasure to talk to you today, and hopefully you've really enjoyed just this 101 about whiskey investing as a kick-off episode for In Good Spirits. I look forward to talking to you all guys in the future. Please like, share, subscribe to the channel with all your friends and family and everybody you know, and I hope that they find this podcast as fun but also as knowledgeable and intriguing as you found it today. And I look forward to seeing you all on the next show, talking to you again, and talking to you more throughout the year. So thank you very much for listening. See you next time, and good night.